Hello and welcome to BCR. Let's get your trading day started with the following financial news and market headlines.
The dollar weakened last week due to tepid personal consumption and expenditure data. Markets saw no reason to believe in the Fed officials' calls for rate hikes. The dollar index dropped to a lower level of 104.00. Last week was unfavorable for the dollar, which initially recovered above the 105.00 level in the first half of the week, but as the PCE data brought no surprises, the dollar ultimately relinquished all its gains. The dollar now appears to be consolidating, constantly fluctuating around speculations about the timing of the Fed's rate cuts, rising yields, and the consistent cautious stance of Fed officials. The U.S. had an intriguing week with the labor market expected to be a focal point of debate. Before the end of last week, a plummet in PCE data indicating a drop in price pressures for April pushed gold back to the $2,330 per ounce bottom, erasing the gains, which indicated imminent core price pressures. Spot gold finished the week down 0.29% at $2,327.20 per ounce, marking the second consecutive week of declines. The economic recovery appeared after the release of weak U.S. economic growth data, suggesting that inflation will continue to be controlled and rates are more likely to decrease. As a non-yielding asset, the expectation of lower rates is beneficial for gold. Although sellers had the opportunity to crash the gold price last week, they did not succeed. Last week, as investors awaited Sunday's OPEC+ meeting to decide the fate of the organization's production cuts, the U.S. economic recovery underperformed expectations, causing a resurgence in oil demand and a drop in prices, reaching a new low for the week. Last week, Brent crude prices fell by 0.86% to $81.62, while WTI crude prices dropped by 0.89%, closing at $76.89. Oil prices have rebounded this year, but concerns over demand and the long-term prospect of rate hikes in major economies have pressured oil prices. The warm winter reduced the demand for heating oil, and the Fed's indication that rates will remain higher for a longer period has kept oil demand low.
We hope you enjoyed today's market outlook. If you have any questions or topics you'd like us to cover, feel free to leave a comment. Remember to join us tomorrow morning for the freshest news